Alistair, let's talk about the gold to silver ratio. Well, at the moment, it comes in at around 87 to 1. That means 87 ounces of silver to buy 1 ounce of gold. Down a few points from 3 to 4 months ago. Where do you think it will be when confidence in the United States dollar really wanes? And or if the stock market crashes?
Right. Well, silver, even valued as a base metal, is undervalued. I recently conducted a study looking at base metal values in gold and found that they have fallen to roughly 25% of where they should be on a long-term average. And that would include silver, as well as nickel, copper, steel, and various other base metals. So even on that basis, there is absolutely no premium at all in silver for its monetary qualities. And this is understandable because a lot of the main driver, if you like, for the gold price has been central banks getting out credit and rebalancing their reserves in favor of gold. They don't deal in silver. I mean, they don't see silver, if you like, as being a monetary standard at the end of the day. So silver is not something that they will accumulate. The one difference I would make in this, however, is the People's Bank of China, which under law, or regulations rather, of 1983, the PBOC was appointed by the Communist Party to handle the nation's gold and silver reserves, acquisition, dealings, and so on and so forth. And we know this particularly from what's happened with gold. The Shanghai Gold Exchange was opened by the People's Bank of China, and it owns it, it controls it. It was the People's Bank of China that decided, when it had obviously got enough gold back in 2002, to permit Chinese citizens for the first time to legally accumulate gold. Of course, the story which has not been part of this at all has been silver. It's been, if you like, its role has been concealed. But there is no doubt that the People's Bank of China has also accumulated substantial silver over the decades. I mean, we're talking from 1983 to the current day. I mean, this is quite a long time. So I think silver may well indeed come back at a lower level as a monetary metal. Now, in which case, if we get the faintest suggestion of that as a result of, collapsing markets, collapsing credit, whatever, then certainly I think that gold-silver ratio could fall, perhaps not to under 20 times, which was, we're going back to when some countries were on the silver standard back in 1870. But I think it could easily get back to maybe sort of 40, maybe even 30, which actually gives you quite an acceleration, if you like, of value relative to just hoarding gold. So I think the silver situation is actually very, very interesting. And I just think so in summary, not only are base metals mispriced as a result of fiat currency suppression, but also silver, I think, is the standout metal because of its monetary qualities, for which there is absolutely no premium in it at all. So I think there is a lot of potential for the silver price. And as I say, I don't think it'll go below gold-silver ratio below 20, but I would certainly see 50, and I'd certainly see it going beyond there in a gathering financial crisis.
Yeah, like some good points there. I mean, when you consider that they're at silver to gold right now, 87 to 1, if it drops down to 40, not if, but dropping down to 40, it means that it's gone up double the speed of gold has. Right? So gold's rising, silver's rising even more. So for our own audiences, what it means is you should be probably buying a bit more gold than what you would normally think of, because if you're buying at 80 to 1 that drops to 40 to 1, it means you can then buy the gold with your silver, and you're buying gold at half price. That's what it
it means you will have bought your gold at half price in real terms.
Yeah, exactly.